Hello and welcome to CMS Forex News. My name is Nick Nassad. Today is June 6, 2008. German industrial production fell 0.8% between March and April, and the annual pace slowed to 4.8%. Both figures were lower than forecast and continued recent data out of Germany, showing the largest economy in the Eurozone losing its momentum in the second quarter. March's figure was revised down as well to show a 0.8% decline in output. Foreign manufacturing orders fell 3.8% on the month, while domestic orders gained a slight 0.3%. The U.S. economy shed 49,000 jobs in May, close to the number forecast by economists. However, with an increasing number of persons seeking jobs, the unemployment rate surged to 5.5% from 5%. That is the largest jump in the rate in over 20 years. More Americans are seeking work as higher prices for food, energy, and other goods forced households to have more people working to make ends meet. The fact that the economy is losing jobs at the same time means that conditions in the labor market will feel worse for those job seekers. The dollar was pressured following the release against its main rivals, as another month of job losses dampens expectations of an interest rate increase in the near term, which was a slight possibility as inflation remained a problem and Fed Chairman Bernanke signaled that the Fed was concerned with the value of the dollar. Today's data, especially the large jump in the unemployment rate, may lower expectations that the economy was rebounding more smoothly than first anticipated. The euro-dollar pair rallied 180 pips from its level prior to the release and has ripped off a 380 pip climb from yesterday's low. The pound-dollar pair surged 180 pips following the U.S. jobs data, settling near the 1.97 area after reaching an intraday high near 1.9730. The dollar-yen pair gave up its gains from yesterday, as it fell 115 pips following the U.S. payroll data. It found support at 105.15. U.S. stocks took a pounding, with the Dow Jones falling 400 pips today, and oil skyrocketing almost $11 to end the day at $138.50 per barrel. It was a record one-day gain for the oil futures market. The dollar plummeted about 200 pips against the Swiss franc, completing a 300 pip fall from yesterday's high. A big reason for the rise in oil today was a threat from Israel to attack Iran's nuclear sites. This sort of political event helps to bolster safe haven currencies such as the Swiss franc. The pound Swiss franc fell as well, even as the pound gained on the yen. The pair sank 230 pips from the New York Open to 2:30 p.m. Eastern. For the week, the pair is close to 500 pips lower. The Australian dollar was set to end the week higher against the US dollar, as the prospect that the RBA will raise rates increased this week. It has climbed back near its 25-year high, and an upbeat GDP report earlier in the week spurred speculation that in order to cool inflation and to moderate demand, the bank may have to raise rates again. The New Zealand dollar headed in the other direction, decreasing this week as growth prospects for the economy cooled. The Reserve Bank of New Zealand's Governor Ballard said yesterday that he is likely to lower the official cash rate from 8.25% this year, after forecasting economic growth will be the slowest in a decade. Next week, Monday begins with UK producer prices, which have been running red hot, the RICS house price balance, and the BRC retail sales monitor. The US will post pending home sales, while Canada will unveil its housing starts. And that wraps up the week here at CMS Forex News. Thank you for joining us, and have a good weekend.